Hello. I'm turned my microphone off. Turned it back on now. It's working. It's Friday. I've been busy today. I've rolled out a new launch for a new product this morning. Well, no, for an update of the product. So I'm not with it. I literally have just finished recording a video which is just rendered to go up onto YouTube. And that's why the microphone was off, because I thought I better shut the microphone off just before I press the button to go live. And I didn't turn it on. Anyway, what I was saying before I was being stupid was that the DAX had a lovely clean break today down to target. And then we stopped out and, made a load of money on the DAX this morning. And we've got a gap up scenario on the NASDAQ. Yeah, so we've got a gap fill down. There's your Globex lows. We're at the Globex lows. If the Globex lows pop today, I would say we've got a very easy ORB on our hands. But we'll see. The Dow is sideways completely. Actually, massive indecision at the open. It is end of month, so we may get some volatility coming in. We'll see where we go. Anyway, so there we go. Now we've got a microphone working. There's your 5-minute range in. The DAX is too small by the looks of things. But the Dow, we are ready to rock. That is 15% of ADR. It's just over because you can tell I've got 15% ADR minimum. I've got 15% ADR stop loss, and the stop losses are right next to the opposite ends of the range, which means that that's just about 16, 17% of ADR. That's too small. We have gone into the Globex lows, so we'll see where we go. News-wise this week, so today we've basically got nothing. We've had the CAD GDP, big bear movement on that. I say big bear movement, it wasn't particularly massive. You look at the ADRs today, there isn't any. It's no ADRs today. So there wasn't particularly anything exciting happened off that Canadian GDP number. As you can see, it's just kind of sitting around doing absolutely nothing. So there is no other news today. That's it. Yesterday this week we've had all the big news, haven't we? So all the interest rates this week have all come out on forecast. So the Canadian there, 2.25, we got it. The Fed 4, we got it. The Fed have said that they may not reduce interest rates again. So obviously that's interesting. We may not get another rate drop. Very difficult to call. Bank of Japan did not change rates, and the ECB did not change rates. So there's nothing unexpected happened this week. I was hoping we were going to get something fun, but we didn't. So yeah, not massive news trading opportunities this week either. It's all a bit sideways. So as you can see, there's no ADRs to look at today. RSI wise, there's not much either. Pound US dollar is extended a little bit to the downside, quite a lot actually. It's been embedded all week, but so the pound pairs are all coming down pretty hard at the moment. They are starting to bounce up a little bit. New Zealand US as well, big strong move. That's a nice looking little opportunity for a mean reversion back up into propulsion. That's the Wednesday low, which is that propulsion gap. So that's nice little target to the upside. We'll wait for a reversal on a low time frame. Had one actually. There you go. There's your W pattern reversal going in now. And a few others, but nothing particularly exciting, really. US dollar yen, Japanese weakened dramatically this week again. So, got that gap down here to be filled at some point, but at the moment, Japanese yen is not doing very well. So, anyway, so there's those. There's a few bits and pieces to look at. No break. We're inside bar on the Dow. Interesting. Oh, sorry, I just need to check my VPS quickly. Just started an evaluation today with E8. I didn't check the settings. E8 times are completely different. On my E8 chart, it's 1625. Okay, so I'm short on the Dow. Oh my God, I'm short on the NASDAQ as well. Oh, that's pretty handy. I'm short NASDAQ. On the screwed up that really badly, haven't I? Let me just quickly check my P&L. I didn't even think to check the times. Toolbox. I'll take that. Accidental profit. What do you know? Big move on FOMC yesterday. Yeah, so there was a fair bit of movement on the FOMC. I'm just going to keep my VPS open over there. So let's look at yesterday. So we had a nice spike up. Our FOMC was Wednesday, not yesterday. It's Friday today. So we've had a continuation move, basically, off the back. No, sorry, yeah, that was Wednesday, wasn't it? Yeah, FOMC. So we've had a move to the upside on the dollar. Basically, obviously, FOMC, the Fed, came out and said, we're not going to be dropping interest rates. So they've driven, well, we're not going to be dropping, but we're potentially not going to drop interest rates. So obviously there's a big drive on the dollar at the moment. So everything obviously is coming down against the dollar. That is not a given. At any time they can turn around and go, actually, yes, we will. But it looks like the economists think that we are going to have a freeze for the rest of this year on the dollar. So if that is the case, we should see continued rallying on the stock markets and obviously reduction in the dollar. Pump in the dollar. But we'll wait and see what happens. It's early doors, but it does look like the markets are going to continue with that. So we'll see. But yeah, nice big pop we had. Did you leave the DAX pending orders open? Yes. DAX long trades there if it's going to rally. It's very rare. I mean, these opposite side orders don't get triggered often if they're left there, because obviously we're taking a 5, 10, 15, 30 break on the index. So if we catch one of those breaks, we're either going to get it, which means that we've moved so far away from that it's going to be very hard to trigger it, or we don't get it and we trigger it early, or we stop out on both and there is no pending. So yeah, just leave them in place. I don't ever touch them. I close them off before I finish. So if I, like today, it's a Friday, I'll probably knock off about 3:30, 4 o'clock maybe, a little bit earlier today, but and then I will cancel it off just so that I don't have to babysit it, but I don't shut them. It's going to go that way, it's going to go that way. Euro pound, nice reversal on the 4 hour. Very nice. Hourly. So yeah, nice rejection to the upside. But this propulsion gap is holding as well. Look. So that's your battleground at the minute. If we break short on that, we'll be coming back down into here. 200 ADR to the downside. But that is a new breakout on the pound. So obviously the pound is weak at the minute. Again, interest rates, not sure what we're going to be doing with them, but there's no reason to be bullish euro. But there is a little bit of reason to be bearish pound at the moment, but that can change. So I wouldn't say that's going to be the strongest breakout on the planet, but you never know. What about euro US dollar? Do you think it might rise as I hope to short it, but I'm not at the price currently, too risky? Euro US, yeah, I mean, it's going to basically, it's going to come down while the dollar's strong. So this is a good area where we are now. Very good, this propulsion move. So either you're coming down to the monthly, or we're going to hold propulsion. So right now, but we've got a strong dollar this morning at the New York Open. So, but this is a decent level. ADR today would be a good long back up into here. Short term though. Long term, no idea. But it's coming down at the moment, so not extended enough for me. I wouldn't get into this yet. 4 hour, it's not bad. You know, but you are fighting the dollar at the minute, so the pops are going to be lighter than the drops. Close to being ready, I think. Short on the Dow. Nasdaq's coming down nicely as well. Why has my balance gone down? They're charging commission, aren't they? Commission. I've got raw spreads, that's good. I haven't done an evaluation with E8 for ages. I got a promo code, so I thought I'll have a crack at an E8 evaluation. And I'm just running the ORB on it, basically. So I'm just going to let it run on auto. See how we get on. Right, so the I'm just about to release, there's your sell and buy stops in on the 15-minute ORB on the NASDAQ. So it's a 15-minute range today. That was pulling back up at the side. So I'm just about to launch a video onto YouTube when I come off the live, just explaining the new features in the trade portfolio dashboard, which I've pushed out onto the site today. So under the downloads, the new version is there, version 5. And on the MQL5 marketplace, version 5 is on there as well. Experts. Where is it? Oh, it's the utility. That's why I couldn't find it. Trade portfolio dashboard. Yeah, so I've pushed out the update today. And the document is on the website for it. But basically what the update is look at this one here. It's got members. I went through this morning, so you might want to go to sleep. But it's got new functionality in it now to auto close trades for you. So obviously with the buttons, you can close out trades manually. So you can just close entire symbols out, or you can close out percentages or entire individual trades within a position in a symbol. And now this is automated. So you can set a target to close out individual symbols, and you can set a target to close out your entire portfolio. So if you wanted to have an overall percentage or monetary value on the portfolio to close, we can do that automatically now. So you can leave this running on your VPS, and it will just babysit your entire portfolio for you from a respect of individual symbol closes and individual and complete portfolio closes. But the really good bit is this, the drawdown control. So this now does automated drawdown control for you. So regardless of what strategy you're running as a position trader, whether you're using the position trader EA, whether you're trading manually, whether you're using another system or strategy or EA to position trade for you, this will now manage all of your drawdown control automatically. So you can ask it to monitor individual trades. Probably easier if I move this over here. Actually, let's move it like that. Yeah, so what it does is you can monitor individual trades. So I've got 0.1 here. So what it will do is let's just switch it over to, so we can see percentages as well and lot sizes. And draw down. Close buttons, there we go. That's easier to see. So basically what it does is, I've got this set to 0.1. So basically what it will do is every time a trade gets to 0.1% in profit, this is just a testing account, which is just placing trades at random basically to test functionality. But so that trade there basically is at 0.1. So what it's doing is it's now monitoring this trade and it wants to close it out. And it's going to basically look for a trade to pair this with, which is in orange or red here, and is going to improve our average price on our portfolio positions. It's going to look for any symbol that has a minimum of 3 trades on it. Yeah, so none of those. Yeah, only these ones with more than 3 trades on. And it's going to try to close out 50% of any of these trades and bank 0.1% for us. So it will make sure it guarantees to bank 0.1% while automatically closing 50% of one of these trades, and these trades must be at least 0.1% in drawdown themselves. So it stops it closing out something like this, yeah, or like this, or like this, which are basically pretty much at break even and have no drawdown. So it means you've got to have something that is actually in a decent amount of drawdown, yeah. So it focuses on the problem areas of your portfolio. And you can select whether or not you want it to go the largest lot size first, or you want to go for the largest loss first. So obviously, things with large lot size are going to send you spiraling into drawdown faster than things with small lot size. Yeah. So if you want to reduce your overall lot size exposure in your portfolio, you would select that. If you want to just get rid of the biggest losers in your portfolio, you would select largest loss. Yeah. And you can have a drawdown scope of either individual symbols or any symbol. So if you set this to same symbol only, what it will do is when it's doing drawdown control, there's nothing that it can use at the moment. But let's say, for example, that trade was in more profit. If you set it to be only on the same symbol, it will only attempt to do drawdown control on anything to do with the Euro New Zealand. Okay, so it won't touch anything else. If you set it to use your entire portfolio with any symbol, it will look at every single trade that is in drawdown on your entire account and prioritize everything to be closed out. So it's going to reduce drawdown across your entire portfolio. So this is basically what I do on a daily basis. Is my job as a position trader is to forget about what's winning. It's going to win. Doesn't matter. It's going to go up, go down. It doesn't matter, does it? We win money when trades work out. So we don't worry about those. We're worried about what's not working. We're reducing exposure on those trades. So this does all of that automatically for you. The one thing you have to bear in mind with it, it will only do drawdown control on a trade that will improve your position. So as an example here, we have on the Euro Swiss, we've got 1, 2, 3, 4, 5 trades. You can see that 3 of them have got a black box around them, yeah, which is this button here, which shows you whether or not they are going to improve your drawdown, yeah, improve your average price. So we only ever close out trades which are going to make that symbol's average price move closer to where the current price is, i.e. give us an easier exit. So when it's doing drawdown control on a trade, it will ignore this one because this one is above the average price. This is a sell trade and this one is above our average. Yeah. So if we look at the Euro Swiss, yeah, we've got that trade there and that trade there. Both of those are above the average price. There's the average, red line. Yeah, so it will not touch that. It will not touch that. It will only close one of those because if we close out 50% of that, the average price is going to jump up closer to price for us. Yeah, so if we close out 50% of this one, the average price is going to move further away. We don't want that because we want to try and get out of the trade, don't we? So, so it will automatically only ever concentrate on anything that's got a black box. If it hasn't got a black box, it's not interested. Yeah. So that's it. So there's a video going out on that, pretty much exactly what I've just explained. And there's a PDF document as well on the website, which you can download, which goes through the logic, the benefits, how it works, the entire scope of the whole system with examples, setting recommendations, loads of stuff. Yeah. AI is brilliant, isn't it? I just told AI to explain drawdown control and give me some examples. It created a 14-page document in 5 minutes. I was like, all right. I'm redundant. So yeah, there you go. So that's what that does. So you can go and download that now. Stopped out the Dow. Why have you disappeared? Navigator inserts. So I've just new terminal. Toolbox. Interesting. I'm not stopped out the Dow on my E8 account. So flip long on the Dow and short on the Nasdaq. Afternoon, Brian. Up since 4 a.m. your time. That's silly. Wired on caffeine. Rapid firing trades into the market. It's Friday. Sounds scary. I'm on a double-edged sword now. This account, I want to go long. That account, I want to go short. What shall I do? I'm going to ride it. It's going to go one way or the other. One of those two things is going to happen. It's either going to go up or it's going to go down. I make money both ways. I don't care. Afternoon from Ibiza. Afternoon. Aren't you lucky in Ibiza? Although it's probably not really hot, is it, at the moment, in Ibiza? So yeah, there we go. There's no other news today, particularly exciting. We've had a few Fed talking heads over the last couple of days, but they haven't really mentioned anything particularly exciting. So nothing to report at the moment. There's some the unemployment rate in Japan went up a little bit as well, as did inflation, which is a sign that really we should be increasing those interest rates in Japan. So it'd be interesting to see how they manage this, because obviously the whole point of them going positive interest rates in Japan was to reduce their reliance on overseas investment in the US. So they liquidated all US assets, pushed it all straight into the yen, which obviously gave us that massive intervention move and strengthened the yen for almost a year. And now they have positive interest rates at 0.5%. They were looking to control inflation. Now inflation's going up, we should be seeing an increase in that interest rate. So I would expect to see some positive yen movement coming in shortly. We're getting a lot of negative movement at the moment in the yen. Everything's driving up against the yen. But actually, we are stalling out on the New Zealand pound. Last few weeks, we're not particularly strong either, are we? So I think there's a good chance that we might see some of this current weakness starting to dissipate a little bit, and some strength coming in the yen. But we'll have to wait and see if they actually mention anything, because obviously those interest rates that we've got in Japan at the moment have been very, very stable. I didn't need to do that, but anyway. Have been very, very stable, obviously, at that 0.5% now for 6 months. So we're not moving. So we went from negative interest rates for 20 years. Suddenly, we decided to jump up into positive interest rate territory at 0.1. Then we normalized at 0.25%. And now we're going up in 0.25% increments with the rest of the world. But we haven't done anything for 5 years. And as you can see, inflation is starting now to tick up as well. And that new figure of inflation means obviously interest rates should rise, which will strengthen the yen. So long term, I think we should be sort of getting to the point where we're starting to see that kind of price action kicking in on these yen pairs. But we'll see where we go. Okay, pulling back on the Dow. This is nicely all over the place today, isn't it? Target hit on the Nasdaq. Oh, target hit on the Nasdaq over there, not here, because my trade on the Nasdaq, my entry on the Nasdaq is here, because I stupidly didn't check the time on that account. I assumed they would be in line with all other brokers on the planet, but obviously it's a prop firm, so they do everything completely different. They decided not to change their clocks, which is good for me because I've just hit target on that. But actually, I took a break of the 1 hour pre-market before the market opened. So basically, it was a pre-market break, which is fine. Also works. So NASDAQ, obviously, downside targets. We're looking at gap fill today. So that's not going to be enough. Partial target on the NASDAQ today is here. So it's going to need to do gap fill plus a little bit to get me out of my partial. That's the partial, which is 2R. So it's exactly on the low of that red candle there. That's 2R on the break, the 15-minute. Dow is just in no man's land at the moment, in a mess. Anybody got any other pairs they want to look at today? Anything exciting they want to have a look at? I'm just going to move this all up a little bit. Try and get some of this drawdown off. The other thing you could do now as well, which I didn't cover in the video, which would be very handy, is if you change the colors for the heat map system to coincide with the levels that you're looking for here, you're going to see what the EA is working on. So for example, I've got 0.3 and 0.3 here. So if I set this to 0.3 and set this to 0.3 as well, and if we go in something like 0.3 increments, 0.6, which we won't see. Yeah. So what's going to happen is, because I've got this set to 0.3%, what it's going to do is it will only highlight trades here that are pairings for drawdown control. And it will only highlight trades here that are drawdown control candidates. So it means you can visually see what the EA is going to be working on. It is all completely logged as well in here. So it basically goes through an entire logging process when it's running. Let me just have 5 seconds. 1401. Oh yeah. Should start to log in a minute, but anyway. Oh no, it's not going to log, is it? Because there's nothing going on. So when there is something to look at, it will do all of this. Yeah. So just so you can see it's working, basically. If we just find a trade. Oh, there's none in the logs, but basically what it's doing is all of this data. It's saying basically, I've got a winning trade. I'm looking at this trade on the Euro Swiss, which is 1.09 lots with 328. It meets the minimum drawdown requirement. It improves the average price. So it's a drawdown candidate. In we closing out half of this, we will make minus 164, meaning the combined result is 94 loss. We're not going to do it. So it says rejected. It doesn't meet our minimum threshold, which is making 0.3%. So then it moves on to the next trade. Then it moves on to the next trade. And it goes through this cycle where it goes in lot size order or in loss order for you. And it goes through trade by trade and just says, can I shut this out and make money and also improve my position? Yeah. So it will run through. So there's a profitable order, $71 for the Euro New Zealand. So it looks at the DAX, which is $21 in loss. And it says the drawdown's too small. Yeah. So it's a 0.03 loss. We're saying we want 0.3% loss. So it rejects it. Yeah. then it moves on to the next one. Yeah, and it just keeps going through this cycle, auto closing out every 5-10 seconds or whatever you set your inputs to. So that's a really good little tip. So it will highlight basically, so you know it's got something it can work with and start doing DD control for you. So it just makes the visual, the heat map system a little bit more logical, really. Makes it make sense now, basically. Okay, Nasdaq's still trying to drop. Dow is stuck totally. So it looks like it's going to be a double stop out on the Dow today, which is annoying because it's going to get rid of my DAX profit from the morning. Trying to pass prop challenge with ORB, but still in the middle. Yep, that happens. Afternoon, Plowman. So if you go and do the evaluation on the website, go to the prop firm calculator, you will see that, obviously, depending on how you're risking, but, you know, if you, that's the norm. Yeah. Most strategies will do that for a while, and then they'll pop or they'll dump, and then you will either pass or you will fail. But being in progress is totally normal. This is a really good tool. So if you're stuck in your evaluation with the ORB, you can't do much with the strike rate. Strike rate with ORB is around about 47%. Well, mine's 47%. But let's call it 45. So what you can do is, you know, just instead of targeting 1 to 2, which will pass every now and again, yeah, but still keep you in progress, yeah. Try and target a 1.25, a 1 to 2.5 risk reward ratio, and see what impact that has. Oh, you've passed them all. Oh, you passed them all again. Oh, and again. And all you're looking for is a 0.5 increase on your risk reward ratio. Yeah. The difference between a 1 to 2 and a 1 to 2.5 is passing them all or being in them all, trying to pass them and getting the odd one over the line. Yeah, it's a fantastic tool, this. If I do say so myself, I built it. But for visualizing what tiny, tiny little adjustments can make to you passing evaluations within specific time periods, it's brilliant. I'm assuming you've got an 8% target. If you haven't got an 8% target and you've got a smaller target, you'll pass it more often. Obviously, that's with that. Yeah, you know, in adjusting your risk, you know, what impact will it have if I drop my risk down? Well, you won't pass, but you also won't take any drawdown. Up my risk a little bit, suddenly I'm passing everything and I'm within drawdown limits. You're not actually with a lot of these because, mind you, yeah, you probably will be. Average days to hit, 7.3. Average days, 6.9, 6.7. So don't expect to pass first time within a couple of days. Yeah, it's going to take a week, working week plus to pass it. If you want to pass it quicker, try that. You'll be done in 3 days, but you will fail some. Yeah, be done in 3 days. If you've got an E8 account and you want to pass in 1 day, go with 1.5% risk. Oh, they're all in progress. Look. What? Oh, that's because I put it to 1 day, haven't I? I'll give myself 5 days. See how many days. Yeah, so we pass it in 3 days. So E8 have got no minimum term. So if you want to pass it in a couple of days, just use 1.5% risk and you'll be done. But bear in mind, you will fail some, obviously, because we can't control the market. Stopped out in the Dow. Frustrating day today. Afternoon, Mimo. What strategy is that prop firm simulation taken into account? It's not a strategy, it's a simulation of any strategy. The strategy is 1 to 2 risk reward ratio with a strike rate of 45%. Strategies are relevant, isn't it? The market has a 50-50 chance of going up or down. Yeah. So whenever you trade any strategy, yeah, your strategy will have a strike rate long term, yeah, based on a risk reward ratio. When you increase that, that drops. When you reduce that, that increases. Yeah. So if you have a strategy that has a 50% strike rate and you have a 1-to-1 risk reward ratio with 1.5% risk per trade, you will pass some evaluations. By pure luck, you will get a run of trades at some point that gives a positive return. So this is not a strategy. This is a simulation. So you know what to do, basically. Yeah. This is where people fail. Yeah. They have no strategy. They have no risk reward strategy. It just explains to you how it works, how the mathematics of trading works. Trading is not about finding a strategy. Trading is about a mathematical equation to achieve a goal. Yeah, there is no such thing as a strategy in trading. There's 3 strategies in trading. There is only 3 that exist: trend trading, mean reversion, and breakout. Yeah, you show me 1,000 strategies, I will boil those down into 3, because there is only 3 things that market can do. It's either trending, it's breaking out into a trend, or it's not. It's going sideways. And if it's sideways, it's mean reverting. That's it. So go and find me a strategy. Tell me which of those it is. Give me the strike rate and what risk reward it uses, and I will show you how often it will pass an evaluation. If you tweak that strategy to there by making one small change, it will have a massive impact on whether you pass or fail an evaluation and how quickly you do it and what drawdown you have. So if you find that you've got a strategy that is brilliant, but it fails evaluations because it's got a low strike rate, yeah, and it keeps failing a lot of the time, not very good. Let's go with a trend strategy. Say you're a trend trader, yeah, your strike rate's not going to be more than 33%. Yeah, you're going to fail a lot, aren't you? Right? But if you reduce your risk, what you'll do is you'll have a lot more that won't fail, but they'll take longer to pass. So instead of going with a 2.5, why don't you just up it to a 1 to 3 risk reward ratio and see what happens? My God, all of a sudden that trend strategy is passing the majority of the time, not failing the majority of the time. So it's designed to help you understand the mathematics behind trading. Strategy is irrelevant. You can give me a coin. You can pick any symbol now, any time frame, and just flip a coin and tell me to go long or short, and I can make money out of it. Because I know how maths works. And all it is making a risk reward positive and making sure that you achieve a strike rate that makes that risk reward work. I can have a 60% strike rate with a 1-to-1 risk reward ratio and make no failed losses there, no failed accounts. If I increase that strike rate to 70%, suddenly I pass everything. Or I can have a strike rate down here where I lose 80% of my trades, yeah, and I'll never win. But if I just basically flip a coin and go with a 1 to 5 risk reward ratio, suddenly I'm making money. I've passed evaluations because it's got nothing to do with strategy. Passing evaluations is about hitting a target set within a risk parameter set. And you can manufacture any strategy to achieve a target if you know maths. This is all this does. It's a mathematical equation. So go and find a strategy, run it in a strategy tester, and get a strike rate out of it. When you've got the strike rate of that strategy and the risk reward ratio that it's running at, put it into here, run a simulation, and see how many times you'll pass an evaluation with it. Take 20 evaluations. This is going to pass too much. Let's drop it down. Yeah. Take 20 evaluations and get 11 funded accounts. Take 20 evaluations, get 9 funded accounts. Take 20 evaluations, get 4 funded accounts. Doesn't matter what the strategy is, does it? If the moon is half a moon, go short. If it's a full moon, go long. If this is positive, you will win. That's all there is. Sounds simple, but it is, isn't it? Same with position trading, yeah? This is this account here for 3 days has been taking trades at random on a 1-minute chart. It's achieved 20% return with a 13% drawdown open. So I can press the close button here on all of this now and just walk away with 7% at random. The reason it's making money is not because it's a brilliant strategy. It's because it's using a mathematical equation to handle drawdown, which produces a statistical edge. It's completely random. Basically, on a 1 minute chart, it waits for price to go up and then it sells it at random. And then it waits for it to go down and it buys it at random. But when it gets out, it makes more than it loses. And when it's losing, it uses its profit to reduce its losses. Maths, it's simple maths. It's not simple maths, it's complicated maths actually, but it's maths at the end of the day. And this is all trading is. There's no bank out there that sits down and goes, do you know what, we've got a secret strategy that nobody else knows and this is how we make all our money. What they have are quants and degree-led teams who have mathematical degrees. Yeah. And they sit down and analyze market statistics to produce forecasts which have a mathematical edge. There's nobody out there going, do you know what? I've got this indicator. And it wins 80% of the time. Because an indicator gives you a buy or a sell signal, which as its standard is a 50% up or down, isn't it? Markets are binary. So there is absolutely no way that you can create an indicator that has a strike rate, because an indicator gives you a 50-50 chance. It tells you to either buy or sell. Yeah, it doesn't give you a statistical edge because an indicator doesn't set a stop loss. You set a stop loss, you set a target. The indicator just gives you a binary signal. So an indicator cannot be a strategy. But the indicator gives you the signal. The signal then says, what do you want to do with this lot? This is a byproduct of this. That speeds up or slows down your rate of drawdown or gain. Yeah. So this is your speedometer. Put it down here and everything will be slow. It'll be in progress all the time because it's slow. You speed it all up, all of a sudden everything becomes fast. Yeah. There's your speed. There's your accuracy. Yeah. And this is your gain. These three things together are the core of every single strategy on the planet, of which there are three. The whole market runs in threes. Everything in trading works in threes. Up, down, sideways. Buy, sell, flat. Yeah. Breakout, trend, mean reversion. Strike rate, risk, reward, risk. Everything runs in threes in trading. It's just maths at the end of the day. If you're good at maths, you're good at trading. If you're crap at maths, I heard McDonald's are hiring. Pound odd. Sorry, I just went off on a rant there. It's Friday. Nothing happens on Fridays, so I end up ranting a lot, don't I? Pound odd, nicely extended, good long opportunity. I actually am long this. No, I'm long pound New Zealand. Sorry, so I'm long the pound New Zealand version. But yeah, I think I've got 3 on this. So my average is here. Moment. Yeah, so pound odds, same thing basically. So I'll be looking for targets there. Got a little gap fill there as well, potentially, and that will get filled at some point. But initially, that's your target to the upside. So if it's going to continue to the downside, I've already got it marked on the chartlet. But that's your most recent upside resistance, which will potentially turn into support, which is this propulsion gap. So at ADR 100 to 125 ADR today, you're going to hit that if we get down there, or maybe on Monday. Yeah, so this propulsion gap here on the 4 hour may well just be that trigger back up. Possibly. Wait and see if it gets there. Long in EuroCAD. I'm long pound CAD, which is the same. Except the pound's come down a lot more. We're out of divergence a little bit, in divergence a little bit. So we're just breaking down at the moment into this propulsion gap. So this area here, obviously lower that propulsion gap is likely to be resistive or supportive in this case. So watch the monthly lows. So if you're in this long, target to the upside, I mean, this area here, you've got this lovely 3-bar reversal on the 4-hour here. Yeah. Which is what we broke through. And as we broke through that, we took out the weekly low as well. So we're using that weekly low now as resistance. So you're not getting through here, basically. So you need to wait for it to drop a little bit more, and it'll get a bounce out of either here or this monthly low. So watch this area here as well. But somewhere around here. So I would be looking to take in another entry there and assume that we may go into a range, which is this accumulation here. Or it's going to break down 225, 250 ADR, and then you scale in down on that, which will give you that push back up into where that's broken. So if it breaks here, which is the Wednesday low, that's probably what's going to act as upside resistance on the continuation down. So market structure's short. But this propulsion gap here, which is what we're testing at the moment, they've bought this 4 times now. This is the 5th time that we're attempting to break this propulsion move. So yeah, it could well just hold here. And if that holds again, you're going to at least get up to there. If not, break back up and do this propulsion gap up here, which is where they broke that low and then added their shorts. One of those two things is going to happen. Looks like a trade where patience is needed. What, this one, Euro CAD? Yeah, Euro CAD, if you're talking about this one, yeah, I mean, it's very sideways at the moment. But I think you'll find this Canadian dollar strength, I assume we've got a rally in the dollar today. Yeah, dollar's strong today. Not that strong, but it is fairly strong, which will give you the Canadian dollar strength. So everything's coming down against the dollar. So the CAD basically will be strengthening up a little bit as well. There we go, that last hour it's strengthening up a bit. So euro, there's no reason to be bullish or bearish on the euro at the moment. But all the euro pairs are coming down. Look. So this actual move that we're seeing at the moment is mainly euro weakness. So watch out for ADR hits on the euro today. We're getting close. We're getting close on all of them. Euro yen is going to be the first one to hit. Just about to hit ADR on that now. So watch this propulsion here. So that propulsion gap is where you're going to find a batch of buyers. Nice. If you can get to 125 ADR today, see a reversal on the 5-minute time frame. Look to trade it back up into that low from this morning's session. Just tapped into ADR, look. Literally to the pip. Hasn't triggered an alert yet because it's bid's got there, the ask hasn't. I think one of them hasn't got there. Yeah, look, 106.2. ADR is 106, so there's a 0.2 spread. So that has actually hit to the pip, but the spread has meant we haven't got a trigger on it on the alert. Oh, I should change that someday, shouldn't I? Really? Afternoon, Evan. What will be a good ADR number for adding trades on M1 time frame? Depends how long you want to hold trades for. So basically, if you're trading intraday on 1-minute charts, you want to split the day up into multiple trades. So maybe point I mean, you could go 0.1, but 0.2 maybe. So that's 20% of ADR. So if you think about, this is actually trading 1 minute charts at the moment. So I think this is set to, I don't know what this is set to be honest. 106. I'm not even sure I've got this set to anything. I just wanted it to trade at random. So this is probably set at 0.1. So yeah, so you can set it at 0.1, but that's going to be aggressive. So with ADR, when you're scaling in on ADR, the tighter the trades are together, the lower the ADR number you use for a scale-in, the more drawdown you're going to take. But equally, the faster you're going to exit because the average will be closer to price. So the more trades you take, the closer your average will be and the easier the exit. However, because you're taking more trades, the higher the lot size will be. Therefore, the faster, the bigger the drawdown. So if you get on an hourly chart, on a 1 minute chart, for example, if you go, look at that, it came exactly off of ADR. Look. If you get in with 0.1, you're going to find that if something drops to 150% of ADR, which it will do 10% of the time, you are going to go into massive drawdown because you'll be in 10 trades potentially. If you used a 0.2 of ADR, you'd be in 5 trades roughly. If you use 0.25, you might be in 4. Don't know. I would test it. So stick it in the strategy tester on a 1 minute chart. I mean, it's going to take forever, absolutely forever. And scale in at 0.1. You're probably looking for 20% of ADR movement as a target, maybe. I don't know. Scalp. I don't scalp on. Try that. That's pretty good. There you go. So there's a squeeze. That's an ADR push. Yeah. So ADR is, I don't know what ADR is, but that move there was 203 pips. I think we set it to, did I set it to 10% of ADR? So ADR is roughly 100. So this is a 200 ADR move, 200% of ADR there in one day. There is an ADR on Euro US dollar. Boom. I must have that set to a get out, drawdown control. Yeah, so that's 10% loss. Too tight. So set it to 20%. Yeah, if you do this, run the same test and increase the spacing, you'll get a different result. This is why you don't do position trading on 1 minute time frame, basically. Because if you, let's say, for example, the day that you get in short is the day that starts a 1 week push, you know, a big weekly candle. Yeah. Your account's dead. You've blown it. You can't recover. Because if it's going to push for an entire week and you're trading a 1 minute chart, you'll be in 10 trades by the time it's got into the middle of day 2. There you go. 20% spacing, didn't blow the account. It got out with a profit. Difference between 10% and 20% is survival. Took less than 10% drawdown on that trade. You're up 2.4%. Try that. But yeah, it's a good. I mean, if you this is a great example of a prop strategy. Yeah. So if you get in, this is set on 60-40 RSI on the same time frame. So this is trading nonsense. Yeah. This is doing a little bit like what this is doing. Yeah. This is trading a strategy that, you know, is super high dangerous. Yeah. But equally, on prop, if the market conditions are right, you will pass an evaluation with this style of strategy if they allow it. So, you know, the position trading on the low time frames is good for prop if you are taking extreme conditions. So if you're going to do this on a 1 minute chart, I would want to be getting into those trades when the RSI on maybe the 15-minute time frame or the 5-minute time frame has exceeded something like 80%. So you're going to want something to be really stretched on the time frame above before you start thinking about getting in on a 1 minute chart, because you are trading chop. It's just algorithmic movement. So this is not readable price action really, because it's just order flow, which is fine, but obviously it gives you a million false signals. If you were to trade an RSI on this, yeah, so if you look at the RSI here and how many signals you're going to get on a daily basis. Yeah, so in that sort of 24-hour period, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 trades in 24 hours. Opportunities, I should say, not trades necessarily. But there's 18 signals on one instrument in one 24-hour period. That's 18 opportunities to get it wrong. Yeah, which is why we don't trade 1 minute charts, because you're trading chop. That's something else you can do with the prop calculator as well. Yeah, this is set to 3 trades a day, which is pretty decent for a prop. Yeah, it's using high quality trades. We're not over trading. Yeah, look at the failure count there as 20. We want to find something that's going to actually pass on a regular basis. There we go. So that passed 16 and failed 4, passed 14 and failed 6, etc., etc. You stick that up to 18 a day, right? Actually, it's not too bad, is it? It's because it's a good, decent strike rate. But if you take 18 trading opportunities a day, you're not going to get half of them right, are you? So that's going to drop, isn't it? Your strike rate's going to drop dramatically, which is what's going to cause the failures to start kicking in. Quality over quantity. That doesn't matter. Quality. But as a starting point, use that. What is producing the higher return? Your multi, ORB, or position trading? Higher return, ORB. But that's because it's higher risk. If I drop the risk on the ORB to be the same as position trading, the ORB would produce much similar result. I need to be in 4 trades over a period of 3 or 4 days before I will match the trade of 1 5-minute entry on the ORB. So completely, it's like saying, what's the better car, a Mini or a Ferrari? What do you want, fuel economy or speed? They're totally different things. You can't compare the two. One of them is a massive high risk strategy. One of them is consistent growth. Think investment or casino. Yeah. If you've got £1 million, do you want to go in the casino with it, or do you want to stick it in a high investment account that's going to return a guaranteed profit? ORB, position trading. Totally different things. Nasdaq's pulling back. So we haven't got the gap fill done on the Nas yet. Watch the Globex low. And that propulsion gap there. Potential upside resistance. Got a nice little low there in Globex as well, look. They were using that all morning. Which, funnily enough, is exactly where my stop loss is. So I'm going to move that up ever so slightly. Doesn't make any sense to have a stop loss sitting right on that upside resistance, does it? So, yeah, so this is where I would be looking now for them to start selling. Somewhere in here. So this is the open at Globex. That is our downside support in Globex, which we broke through at the open. So this is the area I would expect them, if they are going to take this short to the gap fill today, to start adding short positions in. The Dow is dead. It's 2:30. Look, I haven't changed my time. It's 2:30. No trades on gold today. What a load of rubbish. Right. That's all done for the day, really. So Nasdaq short. Hopefully that will hold up and go down to gap fill. So target is gap fill on that. The Dow's dead in the water. 2 losses on the Dow. Nice profit on the DAX this morning. So the DAX will have paid for the Dow. So really the only hope of making money today is good old Nasdaq. So we'll see if we get a break to the downside on that. If not, then that's done for the day. Get rid of that DAX long. Fine skill. Is that because you are risking more on each ORB entry, 1% versus 0.25? Yeah. And also you have more opportunity. So don't forget ORB, we get a minimum of 6 to 8 opportunities a day. So we get a long and a short on the DAX, a long and a short on a Dow, long and a short on the Nasdaq, potentially a long and a short on gold. Yeah. So easily could take 8 trades a day at 1%. That's 8% risk per day. Position trading, I'm waiting for the 1 hour RSI extension to happen. Yeah. So I only get 24 hours in a day across these symbols where there's a potential that I might get a signal or a condition in the market that may give me a signal to enter a trade with a 0.25 risk over an entire day's worth of movement. So opportunities on position trading are probably 8 a week, maybe, if I'm lucky. On the ORB is 8 opportunities a day. Yeah. So that's why it gives a better return. We're risking 4 times the amount, probably 15 to 20 times more opportunities. Yeah. Slow burn, consistent profit. High risk, high return, or high loss. Yeah. That's why there's a difference. It's, position trading, we're not looking to make a fortune. What we're looking to make is somewhere between 5 to 15% every month of the year. Yeah. With ORB, I'm looking at making 2% a day, 3% a day. But equally, I can lose 5 or 10% a day. If all 8 of those trades, go the wrong way, you can do it here. Look. We take 8 trades a day, right? And we only win 20% of those trades with a 1% risk and a 1 to 2 risk reward ratio. So this is exactly it. So in a week, if we take 8 trades a day and we have a losing run, there is no scenario where this comes out pleasurable for you. Equally, when every single open is explosive, we're doing that. Yeah. Payout from prop, payout from prop, payout from prop, payout from prop, payout from prop. Market goes into quiet mode for a week. Failed account, failed account, failed account, failed account. This is what trading's all about. Trading is not about being able to achieve this on a consistent basis in prop. It is physically impossible. I don't care who says they have had 20 payouts from prop in a row. They're lying, because if they can't show me that, I'm not going to believe it. No one has ever done that I've ever seen. Yeah. What they do is they will pass, they will get paid, and they will blow the account, because the laws of mathematics mean that they will get a losing run, which will give their strike rate for that week a low percentage, which, using the risk they use to achieve those payouts, will blow the account. I don't trade everything on prop. I have my own capital, which I don't care if the P&L does that on it. As long as the P&L does that long term, I'm happy. That is a cost of doing business. But it's also a blown account in prop and a failed evaluation in prop, whereas that is a passed account and a payout in prop. But there's nothing consistent about that, which is why we cover the strategy that we cover in the academy, yeah, and how to actually get paid in prop. It's a totally different approach to actually being paid than it is to trading your own capital. So those two strategies are just totally different. You can't compare them, because one of them is making money long term and one of them is not gambling. It's just never going to be consistent. Yeah, if you look at the standard risk reward calculator here, the basic one, not the prop version. Yeah, even if you have a 40, let's say you're not having a great year with ORB, and it's somewhere like that, right? So you're only making $2,000 off 100 trades. So we're taking 8 trades a day. I know the maths on this. I don't know why I'm calculating it. There's 20 trading days in a month. We're taking 160 trades. I don't know why I even needed to calculate that. Right. So there's a month gone past. Okay. So in that month, we've made $3,500. Doesn't matter how many times I run this simulation, we make $3,500. The maths is the maths. Yeah. I cannot physically take 160 trades a month with those statistics and not achieve the same result. Mathematically impossible. However, what I will do is blow accounts over and over and over again if I'm trading prop. If I'm trading my own capital, I will make that every month guaranteed. But I can't do that on prop, because prop knows that I will have a losing run of 10 trades, and that losing run of 10 trades takes me beyond my maximum loss exposure, which means I physically cannot hold an account for more than a month. This is why people lose all their funds in prop. Yeah, you can tip as much into prop as you like, but the maths means you can't hold the account. Why do you think they're making 15 million a month? They're good at maths. Yeah. But some months, yeah, if you start here, happy days, payday, before you blew the account and passed the next evaluation, then lost the funded and then passed the next evaluation. But this one, you passed and paid. Probably didn't do much there. But yeah, pass, payment, fail. Pass, fail, pass. What happens next? Dunno. Run it again. Probably pay. Fail, fail, fail. Pass, paid. Pass, fail. Pass, fail. That is inevitable. That is guaranteed. But that is inevitable. And this is what prop does. This is why the ORB strategy frustrates people, because they don't understand the mathematics behind the strategy. The strategy has an edge, a long-term edge. It's 2/3 of the time the market has explosive opens. Those explosive opens with a 2-to-1 risk-reward ratio give you an edge in the market. However, the edge is not consistent. This is where this helps you plan and understand how to stay within. So that all you do with this prop calculator basically is the statistics aren't going to change. Yeah, let's call it 45%, 1 to 2. This is a variable. You have the ability to adjust this. This is a constant. Yeah, this is the constant edge of the for the ORB strategy. Your whatever strategy you trade may have that and that or that, whatever that is. These are constants. This is what the strategy has achieved consistently over a period of time, averaged out. This is a variable that you can adjust when you take a trade. These are variables set by the prop firm. Yeah, these are also variables set by the prop firm. This is a variable that you cannot control because you don't know whether you're going to take 1 or 2 trades on the DAX because you don't know whether it's going to be a clean break or not. So this is something you can't really control. This is a variable, a constant set by the prop firm. Yeah. So if they ask me to achieve a 6% target with a 3% drawdown, which is exactly what I've got with the E8 evaluation that I'm running at the moment. Yeah. With that strategy, ORB, with a 0.4% risk per trade, I am going to pass some evaluations. But I'm going to lose some. And I have no control over it. The random appearance of these trades here is different every time. Yeah. Every single time. The longest losing streak was 5. The next time I did it, it was 3. The next time I did it, it was 6. The next time I did it, it was 5. Yeah. These are all completely random things. If you reduce this down, yeah, you will survive pretty much constantly in prop. But what won't you do? Pass an evaluation or ever get paid. They know that. So what they force you to do is get past a target, which is doubling an account. But they know that this is going to happen over and over again. Which is why you don't get paid. But if you use your own capital, that's the result every single time. Unless something changes, you know, if suddenly the market goes, actually, I'm not going to have momentum breakouts at the open like I have for the last 100 years, it won't work anymore. But not likely to happen, is it? Really? And if you get greedy, yeah, that's going to happen. And you're not going to make much more money. Yeah. So, you know, if you get aggressive, that's going to happen. But you're not going to make much more money. If you increase that, you will make more money. But if you increase that, you've got to have a bigger account size, haven't you? If you reduce that, you're going to make less money. It's all maths. All trading is maths, yeah? It's just literally maths. It's numbers that go up and down. If you were to go into a trading floor at the moment, there's a plus button and a minus button. Yeah? You press one of those. That's it. All you got. If you press the plus button and it ticks up, when you press the minus button, you either make money, well, you always make money, but if you don't press it fast enough and it comes back down, you lose money. And then if after you've pressed the minus button and taken your money, it flies up 3 times further, it makes you mad and it makes you overtrade and makes you blow your account. It's very simple, isn't it, trading? I like Friday afternoons. Waffle. It's Friday. Telegram. Brian's put something in Telegram. Oh dear. I'm not sure if I can play this. I'll have to listen to that later. Brian's made me some tunes. Oh dear. There's a new AI out, isn't there, that does music generation. Keeps coming up on my timeline. So we've blown through that resistance. So this propulsion gap now is basically what's holding us back. So stopped out on the NASDAQ. It's either going long on the NASDAQ or it's nothing today. It's going to be one of those days today, unfortunately. Yeah. Is it paramount that you get a 2-to-1 risk reward? I have a habit of closing earlier, often 1-to-4 because of price action. I just accept a lower win rate. Go and do the maths yourself. Yeah, this is all free. Go and use this. Go and do the maths yourself. You can't use a 1.4 because I haven't got it, but a 1.5. Yeah. So if you go 1 to 2 risk reward ratio with a 45% strike rate, yeah, risking 0.5% a trade, you will guaranteed all the time, if you take 160 trades a month, win $3,000. Nothing else can happen because it's mathematically impossible for anything else to happen. If you reduce the strike rate to the risk reward ratio to 1.5, you will make $1,000 a month. Nothing else can happen. Physically impossible. Every time I press this button, it makes $1,000. That's it. But the order at which these trades appear changes, which changes your equity curve. That is the only variable that we have. In 160 trades a month, with a risk reward of 1.5 and a win rate of 45%, the only variable that can happen is the order at which trades appear as wins and losses, which creates a unique equity curve for the month. But the month will always end at the same number. So if you don't let your winners run, you will make less money. If you let your winners run, you will make more money. If you let your winners run even more, you will make more money. And if you let your winners run even more than that, you'll make more money. But by letting your winners run, you introduce more volatility into your equity curve, because without taking that 2 to 1, it can stop you out and then hit your 3 to 1, meaning that your strike rate will reduce. And if your strike rate reduces, you still make more money than you did with a 1 to 2 risk reward ratio. But if you go down to something like 34% and run it, you're making $3,000. Go down here, you're making 1,200. Go down here, you're making 447. So if you go to something like a 25% strike rate, you're going to break even for the month, every month, without fail. There's nothing you can do but break even. So if you lost 75% of your trades with a 1 to 3 risk reward ratio, the worst case scenario is you just pay commission and spread. But you wouldn't do that. And do you know why? Because you'd see 13 trades in a row lose and you'd go, this system's crap. I'm not trading it anymore. Just before it got your money back for you. That's why we system hop. Increase your risk, you will constantly make a loss of 3,000. Go to 3.25, suddenly you're back to break even again. Go for a 3.5, now you're up $4,000. Same strike rate. You're still a crap trader, but by moving from there to there, which is half an hour, it's nothing on a chart, is it? It's the difference between making $4,000 and losing $3,000. Go and play with this. This is an absolute eye-opener for loads of trade. I've had of all the stuff I've built on this website, and there's a lot of it, yeah? Of all the stuff I've built on here, this is the thing that I get the most messages about. Can I make it do? Can I make it do? This is brilliant. Could it do? No, it does exactly what you need it to do, which is just tell you how the world works. This is how maths works in trading. This is how maths works in prop. Yeah. It's just a visual representation of the mechanics behind the scenes of what you do. So when you flip a coin, yeah, with a 50% strike rate, you will, with a 50% strike rate, get a head or a tail exactly the same number of times at some point. It may go up to 70-30 at some point. It may go down to 22 and 78 at some point, but it will end up at some point hitting that 50 again. Yeah. It's the laws of mathematics. It can't do anything else. At some point, it will return to the mean. Yeah. If you slightly skew this from a 1 to 1, yeah, up, that will drop slightly. But this is where your edge is created. Yeah. If you can get that up more than that drops, that's an edge. This is all trading is. It's mathematical edge. An edge is a combination of that and that equals a mathematical certainty outcome. It's just getting the maths right. Yeah. But the maths is always geared against you. There is no way to win this. Long term. Short term there is, not long term. This is where they make all their money, isn't it? Right. If I could go back 10 years and talk to myself 10 years ago when binary options was big, yeah, everyone was going, binary options, have you seen this? You could basically gamble on it. So basically you just say it's either going to be above or below the line and you press a button. If it's above the line, they give you more money. Yeah, everyone was like, binary options, that's the way forward. Trading's too complicated. Binary options is easy. Buy or sell and just wait for the amount of time to go past and then we either make money or we don't. The mathematical equation for binary options meant that there was a house edge every single time you press the button. It was physically impossible to win. It's the same as casinos. There's a house edge. Yeah, prop firms, there's a house edge. But the edge is so huge, for some reason, people are missing the edge. They're just not seeing the smoke and mirrors. There is no such thing as a loss limit of 2% in prop. If you've got a 10,000 account and they're giving you a 2% loss limit, do you know what you've got? A $2,000 account. If you treat a $2,000 account with 1% risk here, for example, you are risking $1,000 on a trade. That's 50% risk you're putting onto one individual trade. If you're going to trade prop, you've got to be down here somewhere. Yeah? And that's aggressive. $200. That's 10% risk per trade on a 10 grand account. That's the maths. They're very clever. Not as clever as me, though. I get in now, so the condition time frame would be M15 8020. Yeah. Test. Had Gemini do a synopsis of your site and create lyrics based on it. Used Suno deep bass and techno. I will listen to that, Brian. Suno, is that the one? Sunny? Suno. Yeah, that's the one I think I've been at. Yeah, that's the one that's been advertising to me. Very cool, isn't it, what AI can do? And very worrying. Very worrying. There's a lot of people out there now with AI YouTube channels and stuff, which is just not real, isn't it? It's slightly worrying. We haven't got a clue what's real and what's not. Big news next week for the Aussie New Zealand. Yep. There will be. FTMO US took away the ability to position trade. Yep. Why do you think that was? If there's any strategy out there that works, they won't let you do it. Yeah, they will not let you do it. This is the thing. They know what that's. The whole thing here, the whole mechanism in prop is geared towards the statistical probabilities of trading. Yeah, there's a mathematical way that binary numbers play out over time. All they've done is they've made the equation skewed in their favor, meaning that at some point it looks so tempting that it's so easy to do, but they know that it's impossible to maintain. It's not impossible. You could have a let's do it on here. Look. You could have a period on stock indices, yeah, for example, where something happens. Let's say, for example, AI becomes sentient, creates its own businesses, which gets so big they get launched onto the NASDAQ index, and it's decided to trade its own stocks 24/7. And suddenly, every single specific time of day, the market explodes, and you can see that, and suddenly your win rate goes up to 70%, and it happens over a period of not 1 month but 2 months. You will make 50 grand, and you won't lose the account because you won't get a losing run, yeah, big enough to blow the account. Yeah, 4 trades in a row, that's the maximum. 5 trades in a row is the maximum I've lost. 7 trades in a row is the maximum I've lost. That's 7%. I haven't got 7% drawdown. Gone. Let's do 0.5%. So I could survive on 0.5%, 8 trades. Will I ever blow the account? I could survive 8 trades, let's say. Never going to blow it. 14 grand. But at some point, my strategy is going to hit a losing run. 9 trades, blown. 6 trades, okay. 5 trades, 9 trades, blown. Yeah? This is 2 months. Maths. They know this. They're not stupid. They know this. Half the people that run prop firms are ex-floor traders or are in with ex-floor traders, or they're in with brokers, people that have worked in brokerages, yeah? Ask anybody that's worked in a broker how brokers work, yeah? It's maths, literally. Underneath that hood, there's a mathematical equation which says that X% of trades will be lost by retail traders. Therefore, do Y equals profit. That's all they do. They execute an edge based on long-term mathematical statistics, which is all we do, isn't it? Except we don't have rules where if I lose 8 trades in a row, I have to give up. If I lose 8 trades in a row on my account, I lose 8 trades in a row because I know that the next 8 trades are going to be winners and I'm going to get it all back, aren't I? Yeah, this goes up constantly, but it will go down for a period. But I'm not worried about that because it's part of the game, isn't it? It's part of the equation. And the equation is based on this. Go play with it. Spend. You need to be a pro member or an elite member to access this one, but go and spend an hour this weekend just mucking about with this, and just look at strategies and run strategies in the back tester here, and get reports out and go, okay, what's the strike rate of this strategy? 65%. So 65% of the trades are profitable. Yeah. What's the average profit? 20. Average loss is minus 26. So we've got a negative R. We've got a 60, what does it say? 65% strike rate. Yeah, but we've got a negative risk reward ratio. So let's call it a 0.75. So we're making less when we win than we lose. Yeah. The long-term edge. I can't lose money doing that. However, if that was to suddenly drop to 59%, not really doing very well, are we? And if that suddenly, for some reason, for a month, dropped to 55%, we'd lose. But if we went with a 1-to-1 risk-reward ratio, we're suddenly making profit again. Don't play with it. It's the best thing on the planet. It's the best thing I've ever created. And it's so simple. It's just literally a maths equation. X plus Y plus blah, 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 blah. I didn't even do it. AI did. I can't take credit for anything anymore. I use AI for everything. It's taken over my life. Do you have past prop accounts that you use? Yes. Yeah. Not long term, though. Not long term. No, none. Because they get taken away. Long story short, I went live with a firm, and in my live account, they still enacted the trailing drawdown. They will do. I reached out and asked them how it makes sense to have a trailing drawdown on a live account. They don't, do they? They make money when I make money. So you would think encouragement to trade without restrictions would be paramount. This is the thing, though. They don't, though, do they? With these live accounts, I'm not sure how many of these live accounts are actually live. You get moved over to funded, and then they call you up to lives. I'm not sure how many of that is actually live. I don't know. I can't get any statistics on any of that, unfortunately. But I don't know. But that's where the trailing drawdown gets you, yeah? So, this is the one thing I hate about Take Profit Trader. The end of day trailing drawdown is $2,000. They asked me to return $3,000. So what they're asking me to do is 150% return. So they give me 2K and they say, don't come back with 2K. Don't come back with 100% return. Come back with 150% return. Yeah. How many traders out there regularly do 150% return on their account? Nobody on YouTube's even doing that, are they? Yeah. No one out there is going, hey, I make 150% a month. No chance. But this is what they're asking you to do. And then, as soon as you get funded, this vanishes and becomes an intraday trailing drawdown, which means that it's twice as likely that I have a losing run, I'm going to hit my trailing drawdown. So what I need is a lucky run for 5 days, which is the minimum. And then I need a lucky run while I'm funded for 5 days to get me up to that level again, because I can't withdraw until I get back to that level. And then I need a lucky run again to get that amount of money in my account so that I can withdraw that amount of money. So I have to do the equivalent of passing 3 evaluations before I get paid. But as soon as I get to this stage, the bit that makes it easy to pass, the end of day trailing drawdown, suddenly becomes an intraday one. So if I'm suddenly in a trade here and there's a spike in the market that suddenly goes, wow, you made 1,000. Oh, no, you haven't. I've just lost $1,000 worth of my drawdown available. So it means that I only have to have a losing run of 3 or 4 trades before that account has vanished. But they don't tell you that up front, do they? None of them. Maths. Good. Trade your own capital. Same as binary options. It was brilliant while it was brilliant. And then everyone went, actually, this is it. It's a con. But anyway, that's the way it works, isn't it? Afternoon, Pot DJ. But yeah, if it was really a funded account, yeah, I mean, they wouldn't do that, would they? They wouldn't change this. In the consistency rule, you can't have more than 1 day as being 50%. And I get this. This is basically to stop people going long before FOMC, and so just making $3,500 off the bat on one spike on the news. I get that. Yeah. But then when you get your pro-funded account, you can't trade over news anyway. So why not just make it the same rule for the evaluation that you can't trade news? Because if you can't trade news in the funded account, why let them trade news in the evaluation account? But that trailing drawdown thing, absolute killer. Absolute killer. So this is the live one. Buffer requirement. There you go. So there's your buffer. Got to get that money up to a certain amount before they let you have it. Drawdown. Intraday. Oh, they move it to end of day. Look. So yeah. So this is the other. This is the catch with them, isn't it? Look. End of day. Easy peasy. Get funded. Really hard. If for some reason you manage to survive here and they actually call you up to there, they move over to end of day again. There you go, Brian. So take profit trader. They're the ones for you. But you've got to get through this. You've got to survive in here somehow long enough to get called up to here. When do you get called up to there? There's got to be some people up there, isn't there? Scaling plan. None. Why even have it in there if there isn't one? Why? It's like saying there's beef on the menu and there's no beef on the menu. Point in that. Anyway, 5K went into the live account. $2,500 trailing drawdown stops at 5K. So essentially, they mitigate their risk once you make 2.5. Yeah, that makes sense. But why make it difficult? Why make our life difficult? Stopped out on the Nasdaq, so that's done. There we go, done for the day. Nothing much I can do today. It's just absolute chop fest, unfortunately. So, hideous moves today. Right, so I'm back on Monday. If you're in the academy on Monday, we are doing... what are we doing on Monday? We're doing practical examples of position trading. So this is part of the position trading bootcamp. Continuing. Wednesday, we're doing lot multiplication and martingale. Not doing it so that we do it. We're doing it so that we don't do it. Just educating on why you don't do that, not why you do that, obviously. And then Friday, average and ideal position. The average and ideal position you should expect. So this is basically just about average position trade. What is an average position trade, basically, and how long it will last, that sort of stuff. So it's just setting up expectations, basically. And obviously, as usual, next week we're back Monday morning for the DAX, and then Wednesday afternoon as usual, and Friday afternoon as usual next week. Don't forget the clocks change as well. So if you are with, if you're in America, obviously, if you're in America, you'll know. But if you're in Europe, they are changing again. So your broker will likely change the times again, which means that you need to change your EAs again. Okay, so we're back to normal. So 2:30 are the streams next week, not 1:30 UK European time. Okay, all right. So have a good one. Anything you need, let me know. I'll be in Discord or Telegram. Go and have a look at the new Trade Portfolio Dash release if you've got it. Keep it the old version just in case you don't like it or there's a bug. But yeah, go and get that if you need it. All right, have a good day. Have a good weekend. Anything else you need, let me know. Otherwise, I'll see you next week. Have a good one.